Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
About 2 minutes away from the end of the trading day, the Wednesday trading session. Vonnie Quinn and Gina Martin Adams counting you down to the closing bell, and here to help take us beyond the bell with a global simulcast, we're joined now by Massar and Madison Mills, bringing together our Bloomberg Television, radio and YouTube audiences worldwide to parse through the most crucial moments of the trading day. Carol.
Another interesting day, right? And those Fed minutes certainly kind of helping to shape to the last couple of hours of trading. What's interesting, I was looking at Fed swaps. They are upgrading that quarter-point June rate hike to near certainty. So there was some speculation or not near certainty, and now it looks like it's getting done, at least based on the Fed minutes and kind of the tone of the market right now, Maddie.
Yeah, really interesting to look through these Fed minutes. I'm searching the word recession, seeing it come up a couple of times, seeing also only one mention of pause here. So that's something that I think is pretty interesting, Gina.
Yeah, and also the equity market generally taking the Fed minutes relatively well, despite the fact that we did find out that two Fed presidents, Fed voters, even at that time, were waffling on 25 or 50 basis points, and the data that we've had since has been arguably quite a bit stronger. The equity markets generally seem to be shrugging this off. Maybe after yesterday's trade, they were just expecting much, much worse to come out today. Yeah, exactly. And we're even seeing the VIX, pretty muted, down just a little bit. It was above 23 earlier in the session, below 23 right now. Some individual companies, though, even as we're coming to an end to earnings season, still announcing the possibility of job cuts. And we have the Washington Post saying that even for meta platforms, Carol, there will be some more job cuts coming.
Yeah, I thought that was a surprise. We'll keep an eye on that one, Vonnie.
Yes, exactly. As you can hear now, we are sounding the closing bells at the exchanges, and let's take a look at where we're wrapped right now at the close. The S&P 500 down 6 points in the session, well below 4,000 though, 39.91 there for the S&P 500, just more than 0.1%. But nevertheless, the last two sessions have both been down sessions after 3 weeks of down sessions as well, Carol.
Yeah, keeping an eye on NVIDIA here as it wraps up. A slight gain, about 0.5%. It's going to report shortly, but keep in mind it's been on a tear since about mid-October, up about 84%, Gina. So we'll see what this one has to say.
Yeah, and really sort of wide dispersion among performers in the equity market. You can see some decent performance out of the auto and component space, materials, retailers. These are relatively risky segments of the equity market, so certainly not a risk-off trade, yet really poor performance for food and staples retail. Those are traditionally defensive stocks, along with real estate, transportation stocks, a little bit defensive down there. So no real clarity or clear signal emerging out of the equity market. Definitely one of dispersion. Maybe pick your spots carefully is the lesson of today.
All right, so that's a look at your broad industry groups. Let's get to some specific movers to the upside here in the Wednesday trade. Palo Alto Networks, this is a top gainer in the NASDAQ 100, up about 12.5%. This is after the security software company came out with second quarter results. They did beat on both the revenue and billings line. Several analysts raising their price targets on the stock, saying the company is managing macro pressures effectively and executing well on its strategy. So that was certainly an outperformer. Caesars, remember we broke the earnings after the closing bell yesterday, top in the S&P 500, a gain of about 5.5%, setting off a rally, if you will, across the gambling space. Analysts positive on the company's fourth quarter results, which included some same-store adjusted EBITDA that did beat consensus. So again, Caesars up about 5.5%. One more, housing sector, Toll Brothers, they came out reporting first quarter earnings per share and orders that did beat consensus. This stock, you can see, up about 3% in the trade. Analysts also coming out responding positively to the print, noting that the company beat to net orders and that they maintained guidance. So some upbeat news there as well, Maddie.
Yeah, and I have some decliners here as well that are a little bit less upbeat. I really want to focus on consumer discretionary, which is up today. Really interesting, given that the S&P 500 retailing index is down. But let's dig into some specific equities here. Of course, we've got Overstock.com. Overstock shares down a little over 7% Wednesday morning, now down by just over 2%. That's after the online retailer reported fourth quarter earnings, of course, and fourth quarter revenue that was weaker than expected. And then we've been talking about it all day. got to talk about TJ Maxx. We know it. We love it. It's down near 2% after a disappointing outlook this morning. TJ reported a shrink-induced margin shortfall in its fourth quarter, and that gave first quarter and annual EPS guidance that trailed estimates as well. But the quarter they delivered was decent, so maybe that's why we're not seeing it dip as much. And then ZipRecruiter. This one is really interesting, falling a little over 22% at the end of the day. That is after the unemployment or the employment platform released full-year revenue forecast that was weaker than expected. That prompted a downgrade from Raymond James. But what's interesting is that Zip guided to softer than expected 2023 revenues because January did not see the typical seasonal improvement for job listings. So that could be one of those bad news, good news situations that could mean good news for the Fed if we are seeing less of those job listings on Zip.
Well, and Carol, you mentioned it, the market now fully pricing in that third rate increase in June. So another 25 basis points fully in after those FOMC minutes earlier. We did see a move in yields. We waited really pretty much until after the minutes before we saw most of the move. But the two-year yield at 4.6933%. And don't forget, yesterday it hit the highs since 2007. So while we're off those highs, we are very close to those highs. The inversion as well is really just not changing that much. The 2-10 spread negative by 77 basis points, Carol.
Yeah, I do feel like we continue to get kind of some fine tuning when it comes to the Treasury trade. And that's where those FOMC minutes played in. And I think something we need to think about is those minutes were before that strong jobs report, some of the other strong data points that came out. So it makes you think, my God, what would the Fed have said in those minutes if it was post those reports? And it's something to think as we count down, Maddie, to that March meeting.
Absolutely. And the Fed obviously talking about the labor market and the labor dynamics in these minutes, saying that wages subdued a little bit, but the overall job market was still a little bit too tight for the Fed's liking. And interesting on that breaking news from Meta on layoffs, Vonnie, that you mentioned, the Fed did talk about those tech layoffs, saying that those tech layoffs may not reveal sort of a larger impact and a widespread weakness in the demand for labor that we're seeing overall. So I thought that was pretty interesting as well, Gina.
With one thing they did notice, though, is commercial real estate, which I thought was a really interesting pivot that they made to sort of talking
Aren't you
not
waiting
just
for that
about
shoe to
inflation.
drop, it feels like almost?
Yeah.
It was really interesting, wasn't it? Because they're finally talking about maybe the consequences of tightening too far, too fast, or too far at least, and where that we might start to see the weaknesses emerge. So that's something to watch certainly going forward.
All right, right now we're watching some earnings in the after hours. eBay just crossing, and fourth quarter adjusted EPS continuing operations. That's a slight beat, $1.07, a penny better than what the street was expecting. Fourth quarter net revenue, $2.5 billion versus $2.47 billion, and then giving an update on the outlook. Right now, the stock up about 2.5% in the after hours. eBay saying it sees first quarter net revenue of $2.46 to $2.5 billion. That is above estimates, folks. $2.36 billion, and also talking about first quarter adjusted EPS from continuing operations. They are bumping this up as well, $1.05 to $1.09. The street estimate is for $1.06. And then Vonnie, they declared a quarterly dividend of 25 cents a share. So investors liking what they're hearing. Stock up 2.6% now.
They're absolutely loving what they're hearing out of Etsy as well. That stock up 7.5% post-market. But we had a beat on the top line. We had a miss on the bottom line for Etsy. Etsy's fourth quarter revenue coming in at $807.2 million. The estimate was for about $60 million less than that. But EPS, earnings per share, coming in at 77 cents, and that misses the estimates by 1 cent for Etsy. Nevertheless, that stock up more than 8% now post-market.
Generally, the market generally happy with these earnings announcements from both eBay and Etsy. How about that dividend increase from eBay? Quite a contrast from the dividend news that we heard earlier today. Also, a tech company offering a greater dividend. So let's keep that in mind and certainly keep a watch on what's going on with those capital deployment strategies. That could be a big story for 2023.
It really could be. And Gina, I'm so interested not only in your take on some of these earnings we're getting here at eBay and Etsy, of course, but also on whether you're seeing any impact from those Fed meeting minutes in the housing and real estate sector in terms of how the market is reacting following those minutes today.
Yeah, we're definitely seeing the real estate space is trading off more than any other sector aside from energy. So along with oil prices, the Fed is definitely having an impact on the market through that real estate segment, through those comments on the vulnerability of commercial real estate, and certainly through this commitment to continuing to increase interest rates. So we are seeing the Fed filter through to the equity market. just maybe not as much as many had feared coming through today.
Going back to what you said, Gina, about eBay and declaring that quarterly dividend of 25 cents a share, this comes on a day when Intel did a massive cut on its dividend. The street was expecting it. They were like saying this is very pricey. I think it was going to cost $5 to $6 billion a year to kind of service that dividend. And this is difficult as Intel does, Vonnie, its build out and help shift the company and go through its transformation. So it's interesting to see Intel, that massive cut, and then eBay declaring that dividend.
We have another one reporting today, not just yet, but in a few minutes we are going to be hearing from NVIDIA. And, you know, it's guided lower. It's been very cautious, but it might be a difficult quarter for NVIDIA as well, Carol.
Yeah, especially with its exposure to the PC industry. The stock, little change in the after hours, but as soon as it crosses, we will all break it down. All right, that's a wrap. Our cross-platform coverage Beyond the Bell on radio, TV, on Bloomberg Originals, and of course on YouTube. Folks, we call it Beyond the Bell, but we will see you again, same time, same place tomorrow.